created a mighty company, a great growth stock, and so forth. And it finally wiped out the shareholders in bankruptcy.
So they had their own money up, hundreds and hundreds of millions of dollars of their own money up, super high intellect, working in a field they knew, and essentially they went broke. And we want to see what has caused businesses to go bad. And the biggest thing that kills them is complacency.
But the last 2 centuries created almost all the growth. Before that, not everybody, but like something like 80% of all people are farmers.
And what's happened over the last 100 years has been pretty remarkable, too.
Yes, in the 100 years I've lived has been even more remarkable. That's pretty much all of modern biology, modern medicine, and modern industrial civilization, modern chemistry. Just imagine what the world would be like. You know, we had photographs for 100 years before we had modern chemistry. But no, it was done by a guy who was a natural, very good chemist. But nonetheless, and he created a mighty company, a great growth stock, and so forth. And it finally wiped out the shareholders in bankruptcy.
Eastman Kodak.
Yes, Eastman Kodak. Yeah. Which is an amazing story that could happen. And of course, it helped me because if somebody as brilliant as old Eastman and somebody who hired as many brilliant people as old Eastman did could take the company into bankruptcy, I figured that lesser people could easily take big companies into bankruptcy eventually, in spite of their best efforts. It wasn't like Kodak didn't try. They hired the most brilliant graduate students. They gave them all kinds of time to think. They learned everything any important man on earth learned as quickly as they could, and so on and so on. And even so, they wiped out the common shareholders.
And that taught you what, as an investor, as a businessman?
Sure, and I was going to be a common shareholder someday in some company, and it would help me to know that it's very easy to wipe out the common shareholders, even in a great company run by a genius.
A few years earlier, Warren Buffett says,
The whole long-term capital management, and I hope most of you are familiar with it, but the whole story is really fascinating because if you take John Meriwether and Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Agani, the 2 Nobel Prize winners, Merton and Scholes, if you take the 16 of them, they probably have as high an average IQ as any 16 people working together in one business in the country, including at Microsoft or wherever you want to name. So there's an incredible amount of intellect in that room. Now you combine that with the fact that those 16 had extensive experience in the field they were operating. I mean, this was not a bunch of guys who had made their money, selling men's clothing and then all of a sudden went into the securities business or anything. They'd had in aggregate, the 16 had probably had 350 or 400 years of experience doing exactly what they were doing. And then you throw in the third factor, that most of them had virtually all of their very substantial net worths in the business. So they had their own money up, hundreds and hundreds of millions of dollars of their own money up, super high intellect, working in a field they knew, and essentially they went broke. And that to me is absolutely fascinating. I mean, if I ever write a book, it's going to be called Why Smart People Do Dumb Things. My partner says it should be autobiographical, but I...